ADA's price has collapsed over 85% from its peak. Everyone's calling Cardano a ghost chain. Are they right? Has Cardano quietly died? Or is it just sleepwalking, ready to wake up when we least expect it? But I'll be honest, the last year or two have tested my faith in Cardano. The excitement has faded, the price is way down, and even in our community conversations, I'm seeing doubt creeping in. By the way, if you want to discuss these things, we have a free educational Discord, link in the description. It's a great place to share insights and vent a little. Lately, the tone around Cardano in our Discord has been uneasy. People ask me, is ADA done for? Should I jump ship? So I decided to find out. I set aside the hype, set aside the fear, and went digging for the truth about Cardano's health. Is it really on its deathbed or just quietly grinding away out of the spotlight? And what I found, Cardano hasn't been doing great, at least on the surface. ADA's price is hovering around the 40-cent mark as I speak, roughly 86% down from its 2021 all-time high of over $3. Ouch. If you were around in the last bull run, most of those gains have evaporated. Meanwhile, other projects have been stealing the spotlight. Ethereum bounced back a lot faster after the crash, and newer chains like Solana grabbed headlines with NFTs and rapid-fire transactions. Cardano, which once proudly sat near the top of the crypto rankings, has slipped out of the top 5 by market cap. It's still a heavyweight, roughly in 7th place as of late 2025, but that slide in rank says a lot. Remember, Cardano was at one point the number 3 crypto behind only Bitcoin and Ethereum. Now, fast movers like Solana and even some upstart chains have leapfrogged it. And it's not just the price and rankings. Cardano's visibility in day-to-day crypto chatter has faded. Think about it. When was the last time you saw hashtag Cardano trending on Twitter or X, whatever we call it now? These days, it gets overshadowed by the latest shiny objects, whether that's AI coins, meme tokens, or whatever project is flavor of the month. The narrative moved on, and Cardano hasn't been the cool kid in a while. Nowhere is this more evident than in the dreaded ghost chain label people throw around. The idea is that Cardano is a blockchain with no real activity, no users, basically a ghost town. Harsh? Yes, but let's check the stats to see how much truth there is to it. How many people are actually using Cardano right now? The numbers are, well, a bit concerning. As of 2025, Cardano supports only about 59 active decentralized apps, DApps, on the whole network. 59. For context, Ethereum has thousands of dApps. Even newer ecosystems boast far more, and Cardano's largest dApp, a decentralized exchange aggregator, sees fewer than 1,000 daily active users. That's it, under 1,000 people using the biggest app on Cardano each day. If that doesn't scream low activity, I don't know what does. It highlights a persistent liquidity gap and a lack of user traction. It gets worse when you look at decentralized finance on Cardano. The total value locked, TVL, in Cardano's DeFi is around $380 million. Now, $380 million sounds like a lot of money, but compare it to the competition. Ethereum's TVL is about $97 billion. Yes, $97 billion with a B, and even Solana, which had its own crash and revival, is sitting around $10 to $11 billion in TVL. In other words, Cardano's DeFi presence is a tiny fraction of the big players. It's practically a rounding error in the DeFi world. So on the surface, the ghost chain talk has some merit. Usage and liquidity are low. I felt the frustration in the Cardano community around this. We have die-hard fans who believe in the tech and vision, and they're in it for the long term. But we also have folks who are fed up, and I don't blame them. After all the years and all the promises, the usage still isn't there, and the price isn't reflecting the development progress. You can feel that split. Some people calling Cardano a failed experiment, others saying, patience, it's a marathon, not a sprint. Even Charles Hoskinson, Cardano's founder, has had to repeatedly defend the project. He hates the ghost chain label and often points out that Cardano does have real users, unlike some other chains that might be juicing their numbers artificially. He's essentially saying just because Cardano isn't flashy doesn't mean nothing's happening. So is Cardano just a failure in slow motion? Not so fast. When I looked under the hood, I found a very active development scene that isn't obvious from the outside. This is where the story gets interesting and hopeful. First off, the developers haven't abandoned Cardano, far from it. By some measures, Cardano's core development activity is among the most intense in crypto. Get this. Over the last year, Cardano's core team logged more than 21,000 code commits to its repositories, reportedly even outpacing Ethereum's core dev activity in that period. That blew my mind. While the world wasn't watching, Cardano's engineers were grinding away writing code like crazy. To me, that says the engine of this thing is still being tuned up and improved behind closed doors. And it's not just code for the sake of code. There is a whole ecosystem building on Cardano quietly. As of early 2025, nearly 2,000 projects were in development on Cardano in some form. Yes, most of those are small or experimental, and not all will succeed. But the fact that developers are tinkering with Cardano at all means it hasn't been written off by the people who matter most for its future. We're talking everything from DeFi protocols like the DEXs lending platforms, to NFT marketplaces, to even real-world utility projects. It's like a pipeline of potential apps that could come to life. And you know what? We have seen glimpses that usage is slowly growing, even if the base is small. For example, late last year in Q4 2024, the number of daily active addresses on Cardano jumped by about 58% quarter over quarter. That's a pretty big leap in users, albeit from modest levels. The number of Cardano wallets has kept climbing steadily, which means new people are still coming into the ecosystem, or at least old holders are creating new wallets to organize their funds. Either way, interest is not dead. It's just that most of these folks are holding ADA rather than using it in dApps right now. Speaking of holders, the Cardano community's conviction is actually pretty amazing. Around 67% of all ADA in circulation is staked in the network. Think about that. Over 2/3 of ADA holders are locking up their coins to secure the network and earn yield instead of trading or cashing out. That signals a lot of long-term faith. These are people literally invested in Cardano's success. Yes, you could argue they're just chasing staking rewards, but if they had zero faith, they wouldn't bother, they'd sell and move on. I'm one of those folks, obviously, running a stake pool and all, and I can tell you a lot of us want Cardano to succeed and are in it for the long haul. Even some big players, the so-called whales and institutions, have been sniffing around Cardano, which is a big contrast to the narrative that everyone's abandoned it. Grayscale Investments, for one, has added ADA to a couple of its crypto funds, and even went as far as filing with the SEC to launch a Cardano ETF. Now, the SEC hasn't approved it. As of now, they've delayed on that decision, and who knows if they ever will. But the very attempt to create a Cardano ETF shows that institutional investors see Cardano as something worth betting on, or at least they see demand for it. That's not something you do for a dead project. On top of that, on-chain data has shown times when large holders, whales, were accumulating ADA on price dips. They say follow the smart money, and some smart money seems to be quietly gathering ADA while retail sentiment is in the gutter. All of this paints a picture of a blockchain that's very much alive, but in a kind of weird limbo, low on users, high on development, tons of potential, but a big gap in realization so far. It's almost like Cardano's hibernating, building up strength internally, while externally it appears to be moving in slow motion. To use a cliche, it's like a sleeping giant. It might be dozing now, but could still wake up and roar if certain things go right. On the other hand, maybe it never wakes up. That's the drama here, and we're all waiting to see which it is. Now, let me share a personal angle. One of the reasons I haven't given up on Cardano is because of the innovation I see happening around its ecosystem. A great example is something I recently got involved with, Unity nodes. This is really cool, and it shows the kind of real-world problem solving that Cardano projects are getting into. Unity Nodes is a new initiative that's actually a partnership between Minutes Network and World Mobile. And if you follow Cardano, you might know World Mobile. They're building a decentralized wireless network and use Cardano's blockchain for part of their system. What Unity Nodes does is basically let regular people like us turn our smartphones into part of a global telecom network. In plain English, you install some software on a phone, and that phone becomes a node that helps test and improve telephone networks around the world. It's like crowdsourcing the job of monitoring call quality and network coverage using everyday phones. Well, it surprised me. It might surprise you too. This might shock you, but I'm not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. When I heard about this, it immediately caught my attention. I actually bought a Unity node license for myself. Each license lets you connect up to 200 phones as nodes, so you can scale it up big if you want. I'm not going crazy at the start. I plan to hook up 10 phones first as a small test, just to see how it all works in practice. If it goes well, I can scale up and add more. Here's the kicker. For contributing to the network with these Unity nodes, you earn crypto rewards, and you can choose to be paid in a few different coins. I've opted to receive my rewards in a mix of BTC, ET, ADA, and XRP. Pretty awesome, right? It means I could be stacking more ADA and other top coins passively simply by having some old smartphones online doing telecom tests. It's like mining, but for mobile network data instead of hashing. Now, I want to be clear, I'm not hyping this as the next get-rich-quick scheme. Unity nodes is a new concept, and like anything in crypto or tech in general, you should do your own research before even thinking about jumping in. I'm treating my involvement as an experiment. I'll include a link in the description to Unity's light paper and their rewards calculator, so you can read up on it yourself if you're curious. The concept might not be brand new to some of you. I've actually touched on Unity in previous videos, but it's still early days. I just love that it represents the kind of real-world utility that got me excited about Cardano in the first place. I mean, we're talking about improving telecom infrastructure and paying people in crypto to help. That's practical, not just speculation. And again, it's tied into the Cardano ecosystem via World Mobile. So projects like this remind me that Cardano's technology can play a role in big, ambitious ideas. Clearly, there's life in the Cardano universe, even if it's not screaming for attention. But what would it take for Cardano to truly shake off the slumber and come back strong? What would need to go right for Cardano to reawaken and reward all of us patient ADA holders? A few things need to happen. First, they've got to execute on their roadmap smoothly from here on out. No more major delays, no more coming soon to tour memes. It's time to deliver. The next big milestone is the full rollout of Voltaire, which is Cardano's governance era. This is actually underway thanks to CIP 1694 and other efforts. The community will have on-chain voting power to decide on proposals and even manage the project's treasury. Imagine ADA holders directly steering the ship if done right. That could be huge for decentralization and could renew faith that Cardano isn't just run by a company, but truly by its users. Second, Cardano has to scale up. It needs to get faster and cheaper to use, especially if a wave of new users ever does come. They're working on it. The famous Hydra upgrade is aimed at making transactions blazingly fast by handling them off-chain and then settling on-chain. There are other scaling efforts too, like input endorsers, pipelining. I won't get too technical. The point is, if Cardano can make using its network as smooth as using Solana or any fast chain, that removes a big reason someone might avoid it. And by the way, some of these upgrades are already in progress. The network is faster now than a year ago, but it needs to be much faster to handle, say, a mainstream adoption scenario. I'm watching to see if Hydra and friends can really change the game on throughput. Third, we need a thriving app ecosystem with actual users. The tech can be brilliant, but if no one is using it, it won't matter. This means Cardano needs a few killer dApps, whether in DeFi, gaming, social, whatever, that bring people in. They have some solid projects. For instance, MinSwap, a decentralized exchange, has been one of the early successful DeFi apps on Cardano. And there are lending platforms, NFT marketplaces like JPEG Store, stablecoin projects like DJD, etc. But none of them have broken out to mainstream popularity yet. If, say, a Cardano DeFi app came along that offered yields or services people can't ignore, or a game on Cardano caught fire that could rapidly change the ghost chain narrative, more usage begets more liquidity, which begets more usage, a virtuous cycle. So I'm really hoping to see more people actually using Cardano dApps in 2026 and beyond. That's going to be key. Fourth, an ETF or other big institutional adoption would be a game changer. I mentioned Grayscale's attempt at a Cardano ETF. If by some stroke of luck the US SEC or any major regulator approves a spot ADA ETF, it's like opening the floodgates. Suddenly, a lot of money from investors who don't want to directly hold crypto could flow into ADA. We've seen how Bitcoin ETFs news can pump BTC. Imagine a credible investment vehicle for ADA. It would lend legitimacy and, of course, potentially increase demand. Now, I'm not holding my breath for this to happen overnight. Regulators move slowly, but it's one of those things where if it did happen, the impact would be huge and fast. Finally, Cardano needs to prove its worth in the real world. This has always been part of its mission, banking the unbanked, decentralized identity, etc. We've heard about partnerships in Africa like the Ethiopian student credential system on Cardano and pilot projects using Cardano's chain for supply chains, voting, even an AI marketplace. The Masumu AI project was mentioned somewhere. If one or two of these initiatives could scale up and show real value to ordinary people, it would be a big validation. It's one thing to say we're big in Africa, in theory. It's another to have millions of users in Ethiopia or wherever actually relying on Cardano for something important in their daily lives. That could flip the script completely. From crypto nerd money to, hey, this blockchain is improving lives. And I have to mention Midnight, which is an upcoming privacy-focused network in the Cardano ecosystem. If privacy becomes a big deal, which it likely will, and Midnight offers a solution that businesses or users want, that could draw in a lot of interest too. So those are the tailwinds that could wake Cardano up. But we also have to consider the treacherous waters, the risks that could push Cardano down further, maybe even kill it off for good if things went badly. One big risk is execution failure. Cardano's team has great ideas and grand plans, but they've been criticized for delivering slowly. If they stumble in delivering on these current plans, say Voltaire's governance has issues, or Hydra doesn't bring the expected performance gains, or other promised features get delayed or botched, that would be a serious blow. The patience of the community isn't infinite. Eventually, even diehards might say enough if promises keep getting pushed out. So Cardano really has to stick its landings in the next couple of years. Another risk, rivals outcompeting it. The layer 1 smart contract space is crowded and cutthroat. Ethereum is still king, of course, especially with its layer 2 ecosystem booming now. Then you've got Solana, which, despite controversies, has proven it can onboard tons of users. Just look at its daily active users and thriving NFT market. And there are newer chains like Sui, Aptos, Say, each claiming to be faster, more efficient, or more developer-friendly. These competitors are fighting for the same developers and projects that Cardano wants. If nimbler rivals out-hype or out-innovate Cardano at every turn, Cardano could lose relevance. It's like a race, and if you fall too far behind in features or ease of use, people won't build on your platform. We already see that with relatively low developer mindshare for Cardano compared to, say, Ethereum or even newer chains. That could either turn around or get worse if Cardano doesn't pick up the pace. Then there's regulation, the elephant in the room. We're in a phase where regulators, especially in the US, are cracking down on crypto in various ways. ADA has already been in the crosshairs. The SEC essentially hinted that ADA might be an unregistered security in some of its enforcement actions. That caused some platforms, like eToro and Robinhood, I recall, to delist or restrict ADA for a time. If a hard line is taken by regulators, for example, if major exchanges are forced to drop ADA trading, or if legal actions directly target Cardano's entities, it could seriously hinder accessibility and scare off investors. The Cardano team and community are trying to be proactive here. The Cardano Foundation is engaging with lawmakers and preparing for new rules like Europe's MACA. But let's face it, this is largely out of their hands. If the law says no, that's a brick wall. Another risk is overall market sentiment. If crypto slips into another long bear market, ADA will struggle. In downturns, money flows to Bitcoin and Ethereum, while chains like Cardano get hit harder. And if the narrative turns negative, Cardano never delivered, that alone can push people away. In this space, perception and momentum matter almost as much as the tech. Cardano doesn't want to become a punchline, but it could if things don't shift soon. So here's how I handle these risks as an ADA holder. I spread out my exposure, especially with exchanges. The past few years have made one thing clear. You need backups. I keep verified accounts on multiple reputable exchanges and occasionally test small trades or withdrawals. If one freezes withdrawals, delists ADA, or runs into trouble, I can move to another immediately. It takes a bit of prep, but it pays off when things get chaotic. If you're looking for exchanges, I've listed the ones I use on my website, link in the description. They're affiliate links, so using them supports the channel at no extra cost. But whatever you choose, make sure you trust the platforms and stay ready for surprises in this industry. Better yet, you might not even want to keep much ADA on exchanges at all. A rule I live by is not your keys, not your coins. Exchanges are fine for trading, but for holding long term, I strongly prefer self custody. Personally, I use hardware wallets like the Ledger to store my ADA and other cryptos securely. If you're serious about crypto, a hardware wallet is a must have, in my opinion. It's like your personal vault. There have been too many horror stories of people losing money because an exchange got hacked or went bust. Don't be one of those stories. Also, never buy a hardware wallet from a third party reseller or some sketchy source. There are fake devices out there. Always buy directly from the manufacturer's official site. I have a direct link to Ledger on my website for convenience. Yes, it's an affiliate link that supports the channel as well, but however you do it, make sure you're getting a genuine device from the source. Keep those recovery phrases safe, and you'll sleep a lot better at night, trust me. Since we're talking about being smart and prepared, I'll also mention that if you want to level up your crypto knowledge and skills, we've got you covered. We run a crypto school over at cheekyschool.com where we offer courses on trading, portfolio management, and risk management. It's basically everything we wish we knew when we started in crypto. If you're feeling overwhelmed or you just want structured learning to become a better investor or trader, check it out. The link is in the description. And as a thank you for watching the channel, you can use the discount code YT50OFF to get 50% off any course. Education is the best investment you can make in this space. Well, besides maybe BTC itself, but you get my point. Our goal is to help people avoid the common pitfalls and make informed decisions, because at the end of the day, doing your own research and understanding what you're investing in is absolutely vital, especially with something as polarizing as Cardano. Let's get back to the core question. Is Cardano dying or just sleepwalking? My take: it's not dead. Development is still happening, the community is still active, and projects like Unity nodes show people are building. But it is sleepwalking. It's moving slowly while the rest of crypto races ahead. If it doesn't wake up soon, it really could fade into the background. The next year or two will probably decide whether this sleeping giant finally gets up or stays stuck. From what I've seen, Cardano still has a shot at a real comeback. The groundwork is there, and if it's used well, the recovery story could be huge, but it might also stay a niche chain with a small, loyal base. That's on the table too. As for me, I'm still in, but careful. I keep my ADA staked, run the cheek pool, explore ecosystem projects, and stay involved because I want Cardano to succeed. But I'm diversified and realistic. If Cardano wins, great. If it doesn't, I'm not wiped out. That's the key with any risky investment. Never put yourself in a spot where one failure ruins you. In the meantime, I'll keep monitoring the data, the development progress, and the market sentiment. I'll keep talking with you all on Discord and here in the comments about what we see happening. I'm curious, what do you think? Is Cardano going to surprise everyone with a second life, or do you think it's going to slowly bleed out? Let me know. I genuinely want to hear the different viewpoints, especially from ADA holders and former ADA holders. For now, here's where I land. Cardano is down, not dead. Maybe it's just coasting until something clicks. Maybe it won't. Nobody knows. Anyone claiming it's guaranteed to fail or guaranteed to moon is guessing. The data shows solid fundamentals but weak performance. It's a mixed picture, and the outcome comes down to execution and a bit of luck. I hope this straightforward breakdown gave you some clarity on where Cardano stands. No hype, no bashing, just my honest read. If you're still holding ADA, times like this aren't fun, but they're when staying informed matters most. Manage your risk, keep your assets secure, and keep learning. Subscribe for more crypto insights, and I'll see you in the next one.